Okay, folks. So this chapter 3 from your textbook, is partly it should take care of the concepts that you will need to work on with your SAP assignment on accounting, as well as SAP assignment on controlling. Okay, so this chapter is called Introduction in Accounting, and basically the learning objectives are to understand the difference between financial accounting and management accounting. Then describe the org level data, then analyze the types of master data, understand the basic accounting concepts, what are the processes involved in financial accounting, the different integration points, and prepare reports on financial accounting. So like all the videos that you have been watching, I'm going to focus on the key concepts. This chapter has 75 slides, or this PowerPoint has 75 slides, so I won't be going through each, but I will be focusing on the key concepts. Okay, and if I'm skipping the slides, of course, I would suggest that you read the slides that I've skipped. But it's just that for time constraint, keeping this video length within a reasonable amount of time, I will skip. Like I said, I'll skip the PowerPoint slides, some of the PowerPoint slides. But here's my thing: the best way to understand this chapter is to actually read the textbook. But this video, you could just refer to make sure that if you're not understanding the key concepts, this video may be helpful for you to kind of understand the key concepts. So let's get to work. The accounting is divided into two major categories: financial accounting and management accounting. Okay, so financial accounting, that's the module that you're going to be working on, the SAP module, and the next one, the subsequent one, is the one on controlling, COS controlling or management accounting. So what's the key difference between financial accounting and management accounting or managerial accounting? Well, one is external, that is financial accounting. So financial accounting is actually legal reporting. These are actual financial statements that you communicate with the investors, the outsiders, the governing agencies, the SEC, all that stuff. Whereas the management accounting is internal, it accounts for the costs and revenues, and it's used for managing the firm. Okay, obviously the content of financial accounting and management accounting is different. One is defined by laws and regulations, so your financial accounting statements are defined by the accounting standards followed in that specific region, specific country, specific area, whereas management accounting statements are determined by the management needs. Okay, what exactly does the management want? The key financial accounting processes: general ledger accounting, receivable, payable, asset accounting, and bank ledger accounting. Org levels: you have the client, you have the company code, and you have a business area. So what's the highest level? Is the client. The company code is the next level. So a client can have multiple company codes. So what do you mean by multiple company codes? So if you look at the right hand side of the slide here, so we have, for each country we can have a company code: GBI USA, GBI Germany, GBI Australia. Of course, like I said, company code is always a region specific. As soon as you move on to a different region, that becomes a different company code. Business area could be an internal division to generate the financial statement. So for example, if you are General Motors, you can have a business area that considers all the financial statements or all the financial record generated by the sales of sedans. Or then you can have another business area that is generated by all the sports cars that GM sells, and so on and so forth. Master data, accounts of charts, general ledger, subsidiary ledger, each is defined. Chart of accounts, just go through that. It's very important you understand chart of accounts. You also understand the general ledger accounts and then the sub ledger accounts. Okay, what are they? They're subsidiaries or sub ledgers. So make sure that you understand what these are. Each of these master data. Okay. So what are the key concepts in financial accounting, document and payroll accounting, and we're going to also look into key concepts in management accounting or controlling. Two-digit code that identifies the process that generated the document. So FI stands for financial accounting documents, DR stands for customer invoice, DZ stands for customer payment, goods issue is WA, goods receipt WE. You just have to remember these. I mean, you don't have to really keep this in memory, because you will be if you run into these terms, they'll let you know what these are. Account type, again, you don't have to remember these. Structure of a FI document, the header consists of document date, type, number, company code, which company, posting date, was the date posted, what's the currency, what's the reference number, and then again in the head item you have account description, posting key, this is debit or credit or amount. You look at a posting key, understand what they are, specifies the account type, whether it's a debit or a credit, the field status of the additional data. You can see, look at the posting examples, you can see the posting key, skim to you whether it's debit or credit, what's the account type, whether it belongs to customer, associate customer, the general ledger account, or vendor, etc. Parallel accounting and enterprise, you can have multiple ledgers, one leading ledger for all company codes, and then you have you can also have a non-leading ledger for each company code. Okay. Concepts in controlling and management accounting. Most data in the management accounting are derived from financial accounting. So financial accounting, remember, it's external. It's for legal reporting. You have to follow standards. Whereas management accounting or controlling, it's basically based on the management needs. It's internal. So most of the data is fed from the financial accounting into the management. Basically, the key function of controlling is to manage and allocate costs. So a company buys something. Okay, so let's say you are General Motors and you buy raw materials. So which department is going to account for that raw material? Somebody's got to consume the cost. So that's what management accounting is there for, to recognize who is going to absorb the cost, because management needs to, at the end of the year, when they're trying to see, okay, which division is a profitable, they need to know all that. So that's why management accounting is there. Companies incur costs as they carry out various business processes. Just give you an example. So each is a cost center. What is a cost center? So that is a master data in controlling. Locations that costs are incurred. It could be a department, it could be an individual, it could be a special project. All the costs are charged to the cost centers. Many process of purchase order. So you could have a purchase order that is associated with the cost center. You could have a production order. You could have a sales order. Now, another thing is cost objects. So collectively, all that objects that consume the cost are called cost objects. Okay. Other processes involve record the values, general ledger. Postings for rent, utilities, wages, these are costs. Somebody's got to consume these, somebody's got to incur these costs, right? So rents, utilities, wages. Then you could have accounts payable, part of the procurement process, receivable, part of the fulfillment process, and then asset accounting, acquisition, depreciation, and retirement. So general ledger accounting concerned with the recording the financial impact of all processes, steps performed within the organization. It could be double entry. Accounts are divided into balance sheets and income statements. Debits and credits. Accounts payable. What do you need to pay to your suppliers or your vendors? That involves subledgers to track the money. Involves reconciliation accounts, and involves goods receipt, GR, invoice receipt, IR. Receivable, what the payments that are outstanding, that you will be receiving from your customers. It's the same. It's just the opposite. You have subledgers associated. You have reconciliation accounts associated. It's asset accounting. So every company has assets, right? Whether it's tangible, intangible assets, so they have to account for that. Concerned with tracking of financial consequences associated with the entire life cycle of an asset. It could be a building. It could be the tools. It could be, anything that is considered as assets can be considered tangible, intangible, financial asset. Tangible assets can be fixed or leased assets. So you could be, let's say you are a company that's manufacturing, computers. So you could be leasing your office. So that could be leased asset versus if it's a building that you own, that's a fixed asset. Asset accounting involves assigned to a company code, business area. They have subledgers and there's general ledger involved. So for the GBI company that you're dealing with, you have assets. This land is an asset. Machinery is the asset. Office furniture is an asset. Vehicles the company owns is an asset. Office equipment is an asset. Asset acquisition has to be a concern or takes care of the internal, external processes. This describes the three processes of purchasing assets externally, and you can go through them. One is established vendor, the other is one-time vendor. The established vendor, there are two ways. One is using the purchasing process, the other is without following the purchasing process. Could be asset depreciation, you have to account for that. So let's say you are a trucking company, you own depreciating assets. The trucks that you own, they are going to depreciate in value because of use. So you have to account for those values of the depreciations of those trucks. Okay, this is a straight line depreciation. The book value start of the year. Let's say you are a car rental company, and you at the start of the year the car was worth $5,000, and there's a depreciation of $1,000, and so the book value at the end of the year, or the actual value of the car, the depreciated value at the end of the year is $4,000. That's what this is trying to say. Retirement, of course, if you have retirement asset, that's what you have to account for that too. Well, financial accounting integrates with every process, because remember that every company has to have financial accounting and management accounting. I mean, it's a good practice to have management accounting, and who doesn't want to have? So every company will have to have a financial accounting and management accounting, and every other module in SAP, whether it's sales and distribution, whether it's procurement, whether it's production, every other is integrated with financial accounting. And this is the integration, and I would really strongly suggest read the chapter on how financial accounting and other processes are integrated. It will give you a much better understanding of the financial accounting module itself. Then there's reporting, like every chapter, at the end of the chapter there's reporting. So of course financial accounting, the key is the key is reporting. You want to make sure that you can report your financials of the company following guidelines to external entities, whether you're investors, whether they're agencies such as the SEC, or even the Internal Revenue Service, etc., etc. These things should be components of your reporting structure. Asset Explorer is a application within SAP that allows you to facilitate reporting. This is what a typical interface of Asset Explorer looks like. The three types of financial statements: balance, income, and statement of cash flows. Okay, and so your reporting standards will depend on which region you are, which part of the continent you belong to, whether North America, what rules, regulations. So whether it's the SEC or the Sarbanes-Oxley, etc. So reporting will depend on that. And these are just screenshots of the way you can generate reports through SAP. So. Well, that concludes the chapter. So, like I said, read the chapter before starting the SAP assignment on financial accounting. Now, this chapter also talks about managerial accounting or management accounting and controlling. Controlling SAP assignment is the subsequent one. So make sure you understand the concepts. the terms, the organizational data, the master data, the accounting, the financial accounting processes, how the financial accounting integrates with the other modules. What's the key difference between financial accounting, management accounting? I think if you do that, you'll have a good understanding of what you're doing as far as your financial accounting module is concerned. Okay, thank you, and have a good day.